The gleaming yellow metal that has captivated humanity for thousands of years is once again making headlines, and if you've been watching the financial markets lately, you've probably noticed something remarkable happening. Gold prices are soaring to levels we haven't seen in years, and silver, often called gold's little brother, is right there climbing alongside it. But this isn't just another temporary spike that will fade away in a few weeks. Something fundamental is shifting in the global economy, and smart investors are paying very close attention. Whether you're someone who has never bought a single ounce of precious metals, or you're a seasoned investor looking to understand what's driving these remarkable price movements, the next few minutes could change how you think about protecting and growing your wealth in these uncertain times. Let's start by looking at the numbers because they're truly stunning. Gold has been on an incredible tear, with prices reaching record highs in multiple currencies around the world. We're talking about gold trading well above $2,000 per ounce, with some analysts predicting it could go even higher in the coming months. Silver, meanwhile, has been experiencing even more dramatic percentage gains, though it still trades at a fraction of gold's price per ounce. And what makes this rally particularly significant is that it's not happening in isolation. It's occurring against a backdrop of global economic uncertainty, geopolitical tensions, and fundamental changes in how central banks and governments are managing their monetary policies. So what's actually driving these price increases? The first and perhaps most important factor is inflation. Around the world, people are feeling the pinch of rising prices for everything from groceries to gasoline, from housing to healthcare. When inflation eats away at the purchasing power of paper currencies, investors naturally turn to precious metals as a store of value. Unlike dollars, euros, or any other fiat currency that governments can print at will, gold and silver are finite resources. You can't simply create more gold by running a printing press or typing numbers into a computer. This scarcity is precisely what makes precious metals so attractive during inflationary periods. History has shown us time and time again that when paper money loses value, gold and silver maintain their purchasing power over the long term. The second major driver is the behavior of central banks themselves. For years, central banks around the world have been net buyers of gold, adding to their reserves at a pace we haven't seen in decades. Think about what this means for a moment. The very institutions that create and manage paper currencies are hedging their own bets by accumulating physical gold. Central banks in China, Russia, India, Turkey, and dozens of other countries have been steadily increasing their gold holdings. They're not doing this because they think gold is going to become obsolete. They're doing it because they understand that in times of economic stress, gold provides a financial safety net that no amount of government promises or economic theories can match. When the institutions that control money supply are buying gold aggressively, individual investors should probably be paying attention. Geopolitical tensions are also playing a crucial role in driving precious metals prices higher. We're living in a world that seems increasingly fractured and unpredictable. Trade disputes between major economies, military conflicts in various regions, political instability in both developed and developing nations, all of these factors create uncertainty. And uncertainty is gold's best friend. When people don't know what tomorrow will bring, when they worry about currency devaluations, bank failures, or economic sanctions, they turn to assets that have maintained value throughout human history. Gold and silver have been money for thousands of years, long before any modern nation-state existed, and they'll likely continue to hold value long after today's political structures have evolved or changed. The currency devaluation story is particularly compelling right now. Governments around the world accumulated massive debts during recent crises, and the question of how these debts will be managed looms large. Historically, governments facing overwhelming debt burdens have often resorted to inflating their way out of the problem, which means creating more money and thereby reducing the real value of their debt obligations. This might seem like an elegant solution for governments, but it's terrible for ordinary people holding that currency. This is where gold and silver become not just investments, but insurance policies against the erosion of wealth through currency devaluation. And let's talk about silver specifically for a moment, because silver's story has some unique elements that gold doesn't share. While gold is primarily a monetary metal and store of value, silver has enormous industrial applications. It's used in solar panels, electronics, medical devices, water purification systems, and countless other technologies. As the world pushes toward green energy and advanced technologies, demand for silver in industrial applications is expected to surge. This creates what some analysts call a perfect storm for silver prices. You have the monetary demand increasing as people seek protection from inflation and economic uncertainty. And simultaneously, you have industrial demand growing as technology advances. When demand increases from multiple directions while supply remains relatively constrained, prices have nowhere to go but up. Supply constraints are indeed another critical factor in this equation. Gold and silver don't just appear out of thin air. Mining these metals is expensive, time-consuming, and increasingly difficult. Many of the world's richest and most accessible deposits have already been mined. New discoveries are becoming rarer, and developing new mines can take a decade or more from discovery to production. Meanwhile, the ore grades in many existing mines are declining, meaning miners have to process more rock to extract the same amount of metal. All of this adds up to supply that can't easily respond to increased demand, which naturally puts upward pressure on prices. The investment landscape itself has also changed in ways that favor precious metals. With interest rates having been at historically low levels for years, traditional safe investments like government bonds haven't offered the returns they once did. When a savings account or bond pays almost nothing in interest, and inflation is running at several percent annually, you're actually losing purchasing power by holding those safe assets. This has pushed investors to look for alternatives, and precious metals have benefited enormously from this search for real returns and wealth preservation. There's also a generational shift happening in how people think about money and value. Younger investors who've watched currency crises, bank bailouts, and unprecedented monetary experiments are questioning assumptions that previous generations took for granted. They're looking for assets that exist outside the traditional financial system, assets that can't be manipulated by central banks or devalued by government policies. While some of these investors are attracted to cryptocurrencies, many are also discovering the time-tested appeal of physical gold and silver. The beauty of precious metals is that they combine the independence and scarcity that attracts cryptocurrency enthusiasts with thousands of years of historical precedent as stores of value. Now, what does all this mean for you as a potential investor, or someone simply trying to protect their wealth? The first thing to understand is that investing in precious metals is different from buying stocks or bonds. Gold and silver don't pay dividends or interest. Their value lies in their purchasing power and their role as portfolio insurance. Financial advisors have traditionally recommended that people hold somewhere between 5 and 15% of their portfolio in precious metals as a hedge against economic uncertainty. In today's environment, some are suggesting even higher allocations might be appropriate. There are multiple ways to gain exposure to gold and silver. You can buy physical metal in the form of coins or bars, which gives you direct ownership and the ability to hold your wealth in your hands. You can invest in exchange-traded funds that track precious metals prices, offering liquidity and convenience without the need to store physical metal. You can buy shares in mining companies, which offers leverage to metal prices, but also comes with company-specific risks. Each approach has its advantages and disadvantages, and the right choice depends on your individual circumstances, goals, and risk tolerance. As we look ahead, several factors suggest that the upward trend in precious metals prices could continue. The structural issues driving prices higher, inflation concerns, government debt levels, geopolitical tensions, and currency devaluation risks aren't going away anytime soon. If anything, many of these challenges are likely to intensify before they improve. This doesn't mean prices will rise in a straight line. Precious metals markets can be volatile, and there will undoubtedly be corrections and pullbacks along the way. But the long-term trajectory appears firmly pointed upward for those willing to take a patient, strategic approach. The rising prices of gold and silver aren't just abstract numbers on a financial screen. They're telling us something important about the state of our global economy and the concerns that are keeping investors, central bankers, and ordinary people awake at night. Whether these rising prices represent an opportunity or warning depends on your perspective and your position. For those already holding precious metals, it's a validation of their foresight and a boost to their portfolio values. For those who haven't yet taken the step of adding gold and silver to their holdings, it's a reminder that protecting wealth requires action, not just intention. The question is not whether gold and silver will continue to play a crucial role in the financial system. History has already answered that definitively. The question is whether you will position yourself to benefit from their enduring value in an increasingly uncertain world. The metals are speaking, and their message is clear. Are you listening? Claude is AI and can make mistakes. Please double-check responses.